hour of your day than talk about earnings calls, right? It's basically the middle of earnings call season right now. The first quarter is just about to be over for a lot of companies right now at the end of March. We'll talk a little bit about that as we go through the day today, because certainly some companies have different timings in terms of their fiscal year end. Today we're focusing on UPS. Their fiscal year ends the same as the calendar year, December 31st. So I've got a couple of questions for you. We're going to use the chat box primarily, but we've also got a few polling questions. Let me get this first one so we can get the ball rolling just a little bit. Let me know, let me get this poll open here. There we go. Is this the first time that you've attended one of these earnings call labs, or what the CEO needs you to know? I got three different choices there. Yes, this is the first time. No, I attended last time, or no, I attended session before. So appreciate you joining in on that. This is something we've been doing over the last several months. As a matter of fact, I think we're probably on number 6 or 7 at this point. We've received a lot of attention from this, a lot of interest, I should say. And so it's something that looks like we'll be continuing to do in the near future. Let me, and if you've got any ideas on companies that you might like to see focused on, you'll have an opportunity to give those to us at the end of the session today as well. So we're going to focus on UPS. Matter of fact, I live here in the Atlanta area. They're just about 45 minutes down the road from me. Any of you who may be familiar with Atlanta, just right down Georgia 400, and you're right there. Let me share the results with you real quick. Looks like we've got a lot of first timers on the call today, but we have had some people who have attended before. So thank you for coming back, and thank you for joining us for the first time. We hope that this is meaningful for you, and we believe that it will. Another question for you. Let me get this one open real quick. Are you a graduate of one of Acumen Learning's sessions? We teach building business acumen. We may call it financial acumen or strategic thinking, a lot of things that we may call it. Business acumen for sales is a popular topic these days as well. So how to look at your customer a little bit closer and determine some of the challenges that they may be going through, or how to speak to them about their financial challenges as well. Let's see here. It looks like we've got several graduates coming in, several people who have never been there. And that's perfect too, because whether you've been to a class or not, we're going to give you a little bit of a review. We're going to talk about the foundation for a lot of these classes. It's the 5 drivers we believe all successful companies focus on. And so that's really the foundation for everything that we do, including this session today. So here's the results as well. No, I've never attended, so we've got a lot of people who've never attended. Thank you for being here again. And we've got several who have attended as well. So you'll help teach a little bit this morning, if you will. Let me do one more question with you. This one revolves around, have you ever listened to an earnings call? Or when was the last time that you listened to an earnings call? Is it this year? We've had some time to listen to earnings calls this year. Was it last year? It's been a while. I can't remember when it might have been. I've never listened to an earnings call. Or is it, I'd rather go to a dentist than listen to an earnings call? What are you talking about? Well, sometimes it's easier to listen to an earnings call when you know what you're listening for. And we hope that that's some of the things that you can get out of this session today. We've got a tool, we've got a process. We're going to share all of that with you. We do a lot of earnings calls with our customers and teach them how to listen to earnings calls even better as well, along with some of the other classes that we do. We've been primarily a virtual company over the last year. I'm sure a lot of you all are working from home today. And for the foreseeable future, it looks like we're going to be a virtual company as well. So let's take a look here. All right, we got a lot of people that have listened to an earnings call this year. We've got some that have never listened to an earnings call. I don't think anybody said I'd rather go to the dentist. I know I certainly wouldn't say that. So let's get moving here. Let's see here. All right. Oops. Sorry. There we go. All right. Now, in the chat box, if you would, let's just make sure we got that working and everybody's limbered up with their fingers today. Get ready to chat. Where are you calling in from today? You can give me a city, a state, a country. You can give me the location in your house if you want to, wherever that may be. I want to see where we're getting our crowd from today. Oh boy. Let's see. I just saw Turkey go by. India, thank you for joining us. Colorado Springs, Kentucky, Uniontown, Ohio. A lot of people calling from a lot of different places. There's Tampico, Mexico. I bet you've got nicer weather than we do today. Got a little rainy day today. I see Romania coming through there, North Pole, Alaska. Wow, what a great group coming in today. So thank you. Thank you for joining us today. Let's see, happy Independence Day, Greece, 200 years. Thanks, Nicole. Appreciate that. India, Romania, dining room at Chicago, Algeria. Excellent. We've got a great group coming in today. Let's talk about some of the reasons why earnings calls are important. You'll see a couple of staggering statistics here, a little bit sad if you think about it, but 95% of employees don't understand their company strategy. 95%. That's just incredible. 90% don't understand their company's important business metrics. What's interesting, we're talking about UPS today. $84 billion company. If any of you all work for UPS or another multi-billion-dollar company, or even millions or even thousands, if we don't know or if we don't understand those important business metrics, it's hard for us to make a difference. And we believe that everybody in the company can make a difference in the financial success of the organization. So it's great that you're listening. Earnings calls are a great way for executives to get their message out. You think about it. This is Carol Tomé. She's the CEO for UPS. This was only probably her third earnings call, I believe it was. So she's fairly new to the CEO role at UPS. She is not new to UPS, as she sat on the board for, I think, about 18 or 20 years. She was also the CFO of another well-known company, Home Depot, prior to becoming the CEO at UPS. A little bit about UPS, more employees than the population of Atlanta. That's about 500,000 employees. That's a ton of employees to have to worry about. 5.5 billion packages delivered every year. I wonder if everybody on this phone call or on this webinar today has received a package or sent a package through UPS. That's a lot of packages going around. 5,100 UPS store franchises. And then here's something for the chat box as well. When do you think UPS started? Started in sometime in Seattle with only $100. $100 got them started. Let's see here. Got some people who know the answer to this. Yeah, 1907 is when they started. So they've been around for over 100 years. What is that? 114 years at this point. So they've been around for quite some time. But think about it. Carol's got to think about it as the CEO of the organization, especially new CEO of the organization. What do your employees need to know? 500,000 employees, they need to know what's going on with the organization, because who makes the organization run? It's the employees, right? Carol does a great job as CEO, but it's really the people in the trenches who are making the company happen. So what do the employees need to know about UPS? What do your customers need to know about UPS? Carol said in one of her comments with the analyst that they've got 19 million customers. That's a lot of customers. Your customers need to know what's going on at UPS as well. Let's see, Sam. Yeah, $100 probably was a pretty good chunk of change back in 1907. Absolutely. Carol also is concerned about what her shareholders need to know. And then finally, what are her partners? What do UPS's partners need to know as well? And the earnings calls, quarterly basis, that's a great way to get the message out to all these different people. So here's my guarantee to you. I don't make many guarantees or many promises in class or on these calls, but here's my guarantee. If you'll do these quarterly earnings call workbooks 2 or 3 times, come join us 2 or 3 times. Practice on a company that you may be interested in as well. If you do these, I guarantee you that you will build your credibility, you'll build your career, and you'll build your company as well. And what employer wouldn't love to see that happen? So thanks for being here to help build your future as well. So there's 3 steps to these earnings calls. Number one is prepare. Number two is analyze. And number three is apply. If there's nothing that we get out of it, then why even listen? So we certainly want to apply what we're getting out of these calls as well. So we're going to help you understand how to prepare, how to analyze, and how to apply all of this to you and your individual role and to your company. So first of all is the prepare step. What do we need to do to prepare? Well, there's basically two parts to every earnings call. All right. Number one, part one is the prepared remarks. Typically, that's done by the CEO and the CFO. A couple of different messages that you get from that. And so we can certainly pull up the transcript and see what those were. We can listen to the call itself. And then the second part of this is the question and answer period. Now, this is done with the analysts who are on the call. I want to say UPS had 16 or 17 different analysts on the call for this last earnings call. And these, the analysts get an opportunity to ask questions, and the executives have an opportunity to answer those questions, however they may choose to answer those. Sometimes it's more than just the CEO and CFO who are answering those, but it's usually led by the CEO, and they have the opportunity to see if they want other help or not. So two basic parts, prepared remarks and the question and answer period. Usually it's about an hour-long call. Every once in a while, it might stretch a little longer. Every once in a while, it might not go as long. Last time I did Walmart, that was a 3-hour call, but they kind of combined a earnings call with a investor meeting as well. So that was interesting. Now, three things to do before the call: locate the call or the transcript. So a lot of people may want to listen to the call. I like to listen to the call and I'll jot some notes down, but afterwards I like to pull up the transcript so I can kind of go through it at my time. I can mark it up just a little bit. Here's a little bit of the last transcript, the UPS transcript that I did. You can see I underline things, I circle things, I box things in. Over here on the right-hand margin, that's where I put my initials for the 5 drivers we're going to be talking about today, so that I can get a pretty good grasp of what's going on during that phone call. So locate the call or the transcript. I'm going to show you how to do that here in just a second. Matter of fact, I'm going to show you right now. So real easy. All you have to do is do a search for UPS Investor Relations, okay? Or any other company that you might be interested in. Your company name, Investor Relations, and it'll take you to a page that looks very similar to this right here. We're basically looking at the quarterly earnings, so we can click on that and see the information that we have for UPS. This is what that website looks like, that particular page. If you scroll down on that page, you get some other information as well. You can see up here the UPS releases fourth quarter 2020 earnings. So that's the press release that's coming out. The 2020 United Parcel Service Inc. earnings conference call. So you can click on that and you can listen to the call for United Parcel Service as well. The earnings presentation. So they don't hide that themselves. They share it with everybody. So a lot of different information there. You can see the SEC filings. We have to file quarterly reports as well as annual reports with the Securities and Exchange Commission. So that's where you can find that. Here's the webcast page. So you can click on that and listen to that. If you aren't able to listen to the call, you go find the transcript. It's usually about 20 pages or so. It's got all the remarks from the CEO, CFO, and from the analyst and the questions that they asked. Great information. If it's not on their website, here's a site I like, Seeking Alpha. You can look up United Parcel Service, UPS, and get tons of information off of here as well. As a matter of fact, here's the earnings tab. And if you just go to transcripts right there, you can get that transcript. And now you'll be prepared to do an earnings call workbook. All right. Now, step number 2, review your notes from past calls. What notes, Kelvin? What are you talking about? Well, that's exactly what we're going to be doing today. We're going to do this earnings call workbook to create notes for UPS. So when I get ready to listen to their first quarter earnings call, I may look back and look at the first quarter earnings call and see some of the things that I heard in that call and see what if there's any progress on some of those items in this particular call. Number 3 is meet with your team. Maybe you've got employees. What better way to build your employees than to listen to an earnings call or discuss an earnings call with them? Maybe it's a sales team. Maybe you all are calling on a particular customer and you want to look at this particular customer. You want to listen to their earnings call. You want to see their financial statements. You want to understand their opportunities, their challenges. We did an exercise similar to what we're doing today, and one of our customers said, "Oh my gosh, our customers are telling us how to sell to them. We just have to listen." And so if we listen enough, we might be able to learn something from that particular customer. So those are the 3 steps. Locate the call or transcript, review your notes from past calls, and meet with your team. By the way, that meet with your team, it's always good just to bounce things off of other people. They may see something you don't see. And so that way, we've got an opportunity to do that. So that's the prepare part. Now let's jump into the analysis part of this. This is our foundation for anything that we do, really. The 5 business drivers we believe all successful companies focus on. That's cash, profit, assets, growth, and people. Now, just a quick review on these. Cash, companies have to have cash, right? Without cash, they're probably not going to stay in business a long time. So a couple of different things that they look at. Cash and cash equivalents. That's how much cash do they have right now. Cash flow or cash flow from operations. That's how much cash is coming into the core part of the business, how much cash is going out of the core operations of the business. Some companies might even look at free cash flow, which UPS does as well. So that's a measure of our cash flows minus our capital expenditures, gives us free cash flow. Profit, a lot of different profit metrics that we might see on an income statement. We may see gross profit, we may see operating income, income before taxes, net income, earnings per share. So we need to understand all of these to be able to understand how we can have an impact. Assets. Those are the things that as a company we own. Those are the things that help drive revenue and income. So we want to pay attention to that. And there's asset utilization and there's asset strength that we talk about as well. And then growth. What CEO have you ever met, or what shareholder have you ever met that wasn't interested in growth? So this is a measurement of different metrics over time to see, are we growing? Are we declining? Are we moving in the right direction? Or how might we want to go? And notice who's at the middle right here. It's people, because people really make all of this happen. So these are the 5 drivers we really focus on. This is what we're going to focus on today. Part of the reason we believe these are the 5 drivers successful companies focus on is cash is tied directly to our statement of cash flows. Okay. It's also mentioned on the balance sheet, by the way, as well. Profit on the income statement and assets on our balance sheet. So certainly a good foundation in those 5 drivers there. Here's the workbook we're going to focus on today. All right. It's a pretty simple workbook. This is the first part of it, first part of the analyze section. You can see over here on the left-hand page, the executive alignment activity. It's a pretty simple exercise. This is reading the letter to the shareholders, or this is reading the transcript that we just printed off, found and printed off. And what we're doing is we're looking for instances of those 5 business drivers that we just talked about: cash, profit, assets, growth, and people. All right, now, the interesting thing is that these CEOs, CFOs, they may not mention those specific words. By the way, here's definitions for each one of the 5 drivers. They're all listed right here. You can see, I won't read the whole thing, but cash position is the balance in a company's bank accounts, cash on hand, and or cash equivalents, etc. So we've got definitions for each one of these if you're not familiar with the terms. We've got examples of what to listen for, what to look for in the transcript or the letter to the shareholders, because they may not always say the specific word. You can see here, sources and uses of cash, dividends or distributions. Well, we pay dividends and distributions in the form of cash. So there's different trigger points to look for as it relates to each one of these 5 drivers. Now, what we're going to do is we're going to read through a couple of messages that I found in the transcript as well as in the earnings call. and kind of do this exercise together. And then we'll get into these other questions over here. Which drivers seem to get the most attention and why? We're not just going to focus on which one's got the most attention. We want to know, why did they get the most attention? What was it that the executives said or the analysts said that led us to say that? What were the 2 or 3 main points the executives were trying to make? They probably make dozens of points in these earnings calls, but they really tend to focus on 2 or 3, maybe 4 primary things. It's hard for us to remember a lot of different things, so we're going to focus on the 2 or 3 main things. A couple of questions. Oh, thank you, and it's been answered already. Thank you, Ginger. What are the goals, trends, and objectives going forward? Where is the company headed? What are we looking for? What are we supposed to do? As employees, we want to listen to this because we want to see what the goals and objectives are going forward. If we're looking at a potential prospect, we want to see what that company is moving toward as well. So it's good to know what are those trends and objectives going forward. And then finally, what key questions or concerns were raised by the analyst community? As I mentioned, probably 16 or 17 different analysts on the call with UPS. Each one of their questions are focused around these 5 business drivers as well. They're following UPS like crazy. They're building their own models around UPS. That's part of where their questions come from. It's up to them to know everything they can possibly know about UPS or the company that they are following at that particular time. So always a lot of good questions. We'll highlight some of those as well. So let's jump into this. I'm going to need your help here on this. We've got the 5 driver model there. This is Carol Tomé, the CEO of UPS. She's been there maybe just under a year at this point. But here's some of the statements. Let's play along on this together. These changes, and she's talking about some of their strategy. We'll talk a little bit more about all these as well. These changes better align employee performance to the interest of all share owners. Now, which one of the 5 drivers, and maybe there's a couple of drivers that are mentioned in there, what do you think? Cash, profit, assets, growth, or people? These changes better align employee performance to the interest of all share owners. Yeah, people for sure. Employees, share owners, those are people. Saw some assets mentioned in there as well. Performance equals growth. I like that. Let's see here. People, assets, and profit. Yeah, you all are getting the hang of this real easily. Let's take a look at this next statement that she says. People led, this is one of their strategies. People led also means creating fewer but more impactful jobs and lowering our non-operating costs. Now, what do you see there? What do you see there? Certainly some more people, right? Probably some cash in there. Yep, because what do we do when we increase our sales or reduce our expenses? We should get more cash. We should get more profit, right? Let's see here. Increasing efficiencies via headcount. People, profit, cash. Love it. Love it. Profit and people. Absolutely. Absolutely. And then finally, this last statement here, innovation driven means driving higher returns on the capital we deploy using new tools, processes, and technologies. Now, she did not mention any of these 5 drivers there by name anyway. Let's see here. We certainly got some assets, tools, processes, and technologies are assets for sure. Cash, the capital that we deploy, absolutely. Let's see, growth assets. I like that as well. Let's see here. And profit, yeah, higher returns. When you see returns, that's typically referring to profit. So innovation driven, I should say, means driving higher returns, profit on the capital, cash we deploy using new tools, process, and technologies. Y'all are great at this. Y'all are great. Now, we may not all get the same answers as we go through this executive alignment exercise. And that's okay, because we're all looking at it from a different standpoint. And so it's, we may get something slightly different, but that's okay. Here's Brian Newman. He's the CFO for UPS. He's fairly new as well. He spent years at PepsiCo, He came before Carol Tomé did. Now, I'm not going to highlight this one as much. I want you to read through this, and I want you to tell me what drivers you see in this particular statement from Brian Newman. Tell you what, I'll read it out loud while you all start answering some of these. Cash, yeah, pretty easy, right? Let's turn to cash and share owner returns. Our cash flow was strong throughout the year. We generated $10.5 billion in cash from operations. That's cash flow also. Capital investments total $5.6 billion, which includes a lot of different assets. There we go. Assets, cash, growth, capital investments equals assets. That's right. New aircraft, vehicles, and facilities equals assets. I love it. Thank you, David. Yeah, profit, growth, assets. Absolutely. Absolutely. Cash. What about share owner returns? What does that imply there? Positive value. Absolutely. Cash. Yeah, because share owner returns is usually in the form of dividends and maybe even share buybacks. Now, UPS did a lot fewer share buybacks, like most companies, in the last year. A lot of companies cut out share buybacks. Theirs may have actually been prior to the pandemic happening. Earnings per share, I like that one as well. So yeah, share returns typically is going to apply to dividends and share buybacks. That's one of the best ways that we can return cash to our share owners. Yeah, thanks. Y'all did great. By the way, we got one from Credit Suisse as well. Allison Landry, she's one of the analysts. Take a look at this one and see what drivers you catch in her question here. By the way, SMBs may or may not be a new term to you. Small and medium-sized businesses. So obviously she said you're focusing on SMBs and other high-margin sectors. What do you see here? Yeah, profit, growth, and then our second statement there as well. Growth, profit, and cash. I like that. Profit, growth, increased margins equals profit, right? Good. People equals customers, employees, vendors, a lot of different people that could be in that people category. Let's see here. Amazon. I'm not sure how to translate that there, Jim. But certainly, yeah, Amazon is certainly their biggest customer, and that came out in this earnings call as well. About 13% of their revenues came from Amazon this last year. So you see how to do this. Let me just share with you the results that I got. Yours might be slightly different, and that's okay. I like to do two different columns here. One is for the prepared remarks. In other words, these are all associated with things that Carol and or Brian said during their prepared remarks. Then over here on the right-hand side of this, it's the analyst questions and the responses that came out of those questions. So you can see the top two drivers that I found anyway, it was profit and growth at 62 mentions and 40 mentions. Now that's cash, assets, and people are not far behind, but we're going to focus on profit and growth for this exercise today. So let's, don't worry, I'm going to get to a bigger screen or bigger print here, but which business drivers seem to get the most attention and why? What were the 2 or 3 main points the executives were trying to make? What are the goals, trends, and objectives going forward? And what key questions or concerns were raised by the analyst community? So let's start with which business drivers got the most attention and why? Profit. Let's start there. Q4 2020 was the highest quarterly operating profit in company history. Wow, that's saying something. Reduced chaos cost. I don't know that I've ever heard chaos cost before, but I like that. And they kind of narrowed it down to bottlenecks and overtime pay. They reduced those. So that certainly helps their profitability. Nearly 50% of SurePost was delivered by UPS drivers, which represented productivity savings. Now, in case you don't know, some of UPS's packages are delivered by the post office. If they can deliver those packages, it's a bigger profitability for UPS. So they actually were able to deliver some of those packages in the fourth quarter. Transformation activities. They actually talked a little bit about transformation 1.0, 2.0, 3.0. The most recent that they're working on right now is eliminating about $500 million in non-operating activities, non-operating expenses. Revenue quality. How do they get the revenue up on their packages? Disposition of UPS freight. This has actually been done at this particular point. Is about $800 million to sell UPS freight. So we'll talk a little bit more about that later too. Operating margin, 40 basis points higher than last year. And they talked about operating leverage as well. Basically, operating leverage is when you're increasing your revenue faster than you're increasing your expenses. So they had good operating leverage in Q4. Growth. Basically, this entire paragraph is about growth. Q4 revenue, operating profit, record annual revenue of $84.6 billion. They were $74 billion last year. Let's see here. Growth in all three segments: domestic, international, supply chain. Freight will no longer be in that category. Diluted earnings per share, SMB volume, small and medium businesses, U.S. domestic revenue, SMB volume growth outside the U.S. also grew. Revenue quality efforts, higher than anticipated peak season surcharge revenue. So in other words, they on high volume customers, they may have had surcharges because of the volume that they knew they were going to take in during that peak period there. And then 5.2% increase in dividends to $3.6 billion. Pretty nice activity around profit and growth. What were the 2 or 3 main points the executives were trying to make? I got 3. It was a successful year, very successful year. Tremendous results, especially in Q4. Record results. They had a great peak season, and their revenue quality is improving, and they're continuing to focus on that as well. A strong focus on operating profit. This was interesting. They barely even mentioned net income. It seemed to always focus on operating profit, and I think I know why, and we'll talk about that here just a little bit when we see some of the financial statements. Transformation efforts was part of that as well. So they talked about reducing their non-operating expenses. The next transformation effort is to reduce some of their operating expenses. So big focus there. And then small to medium-sized businesses. Now, I want you to think about this. This kind of came up in conversation with Carol, that Amazon was about 13% of their business last year. SMBs is a high yielding sector. Do you think Amazon is a high yielding sector? Q4 SMB volume grew 28.5%. Large customers like Amazon grew 4%. So they had growth, but I'm guessing that Amazon is probably not as profitable of a group of companies as the SMB companies there. It's an important customer segment. They're going after it. They're investing in that segment. They want to attract those companies, and they want to keep those companies. Carol actually mentioned there are 16 different initiatives around this segment that they are actually investing in to try to get and keep those customers. Let's see here. 13% of global revenues, but a higher percent of domestic U.S. revenues. Thank you. Thank you. I appreciate that. Let's see. Question number 3. What are the goals, trends, and objectives going forward? Finalize the sale of UPS Freight. They've actually done that. Again, $800 million they got for the sale of UPS Freight. It was actually sold to a Canadian company. It's a capital intensive business with low returns. So in other words, they spend a lot of money on the company, on the freight side of the business, and they get very low returns on that. As Carol said, we don't need to own it to provide that service, so they can source that out through other companies. It also helps improve their operating margin and return on invested capital. And then another kind of buzz phrase for them, that's probably not the right way to put it, but be better, not bigger. So this sale of UPS Freight helps them be better, but not necessarily bigger. And they're going to use some of that cash to pay down debt. Mike, I don't remember the name of the company. I know it was a Canadian company. TFI, thank you. That was it. If I heard it, I knew I'd remember it. But yeah, thank you. Transformation 2.0 programs, reduce non-operating expenses, sale of UPS freight, revenue quality. 2021 is going to see small package revenue grow faster than daily volume. Review network design to see how to increase capacity. So they need more capacity in some of these centers that they've got. Expect to see, excuse me, expect to see operating margin and ROIC expand. And then Transformation 3.0 reduces cost inside the business, so operating expenses. And then finally, expand the domestic operating margin. So a lot of focus on expanding their margins or increase their margins. How do we increase margins? What do we do to increase margins? We increase something and we lower something else. Yeah, thanks, Linda. We reduce costs and we increase price. It's as simple as that. If we know that's what we got to do, okay, let's focus. Where can we increase revenue? Where can we decrease our expenses? Exactly. Question number 4. What key questions or concerns were raised by the analyst community? Margin comparisons, especially Q1 and Q2 2021. COVID did not do damage to UPS's business. As a matter of fact, UPS probably benefited from COVID. As did other companies in that segment as well. And so Q1 saw a little bit of the COVID impact because it really started happening mid to late March, right? So probably Q1 over Q1 2021 versus 2020 is probably going to be pretty good. Q2 is going to be a little tighter because that was a full quarter of COVID impact. So they've got a high bar set to match up with in Q2 of 2021. Cost per package inflation. In other words, it sounds like their cost per package is going up a little bit. So they want to try to get a handle on that. Key drivers to drive stronger performance in domestic package margin improvement. Capital intensity of growth. It takes cash to grow. And they're certainly going to focus on growing. And so they're going to need some cash to be able to do that, especially around design and capacity expansion. Focus on SMBs. Growth in largest customers. Transformation 2.0, specifically the $500 million reduction. Surcharges and pricing negotiations, that kind of came up around, especially around the larger customers. What are you doing to keep those larger customers? Is it going to be something around pricing? Is it going to be something else? Basically the comment was it's all getting to be individualized pricing. So it sounds like it may be something different for one. Maybe surcharges are built in to another. Were some of the things that were mentioned there. Labor issues in Q4, organized labor, stock buybacks in 2021, and the rationale of selling UPS freight. Those were all questions or concerns that came up around the analyst community there. All right, so we've done page 1, we've done page 2. Actually, they're labeled as pages 3 and 4 in our workbook. Now, let's get to the financial analysis. All right, so we can't analyze a company without having a financial analysis. This is a tool that we provide in our class. You're going to get a copy of this with this workbook as well, called Navigating the Financials. So this is a list. We've got 10 metrics here. Your company may be the same metrics or they may be different metrics. When we do a class, we customize those metrics to make sure that it's relevant to you and your company. So let me just share with you the design of this real quick. You can see over here on the left-hand side, 4 out of our 5 drivers: cash, profit, assets, growth, and then people down here at the bottom. Of course, it takes people to make all of this happen. Across the top, we've got our key metrics and equations. So as an example, cash and cash equivalents, and the line item we're looking for on the financial statements is cash and cash equivalents. Here's the part I love. If you're not looking at financial statements every day, you may forget which statement these metrics are on. So this tells you Is it on the income statement? Is it on the balance sheet? Or is it on the cash flow statement? So cash and cash equivalents is on the balance sheet. And there is no equation for it. All we have to worry about is just the answer. So let's take a look. I've got the financial statements. Let's take a look at the balance sheet here. You can see up in the top section, this is our asset section. Typically, the most liquid items in our asset section are toward the top. The lower they get on the asset section, the less liquid that they're going to be. So here's cash and cash equivalents. How much cash did we have? By the way, this is in millions. So how much cash and cash equivalents did UPS have at December 31st, 2020? Yeah, $5.9 billion. That's right, Jim. Thank you. $5.9 billion compared to about $5.2 billion same time last year. So we're going to enter in that $5.9 billion, $5,910 million on that first line. Now, help me out a little bit more on this one. Cash from operations. We're looking for a line item called cash from operations or cash from operating activities, something along those lines. Which statement can we find cash from operations on? Is it the income statement, the balance sheet, or the cash flow statement? Yeah, cash flow statement. That's right. Now, let's take a look at the cash flow statement. Okay. Here's our cash flow statement. It's in 3 separate sections. Mike, you got to go a little faster. Yeah, I noticed that too. It's in 3 different sections. So cash flows from operating activities. Here's our net cash from operating activities. So that is our cash flow. So how much cash flow did we have? Oh, Jeff won this time though. 10,459. Yeah, $10,459 million in cash flows from investing activities. Just point out one other thing to you real quick. Cash flows from investing activities. So a lot of that, most of it as our capital expenditures. If we did any acquisitions, that would be in there. And then cash flows from financing activities. So any financing arrangements, this is where you'll see dividends paid out, stock bought back, and things like that. So yeah, cash from operations, $10,459 million. Now, total revenue. Where can we find total revenue? Which statement? Yeah, incomes. Boy, Jeff all of a sudden got quick, man. He is going. So we're going to look on the income statement now. How much, so revenue is usually called the top line, right? So if somebody says, hey, how's your top line this year? They're talking about revenue or total revenue. Yeah, 84,628, up about $10 billion from last year. Yeah, 84,628 million. So we're going to put that in there. And then we're going to go back to that income statement. How much net income did UPS have? Oh, look, Greg Candare's making a push there now all of a sudden. Yeah, net income, 1,343. Greg got an extra 4 in there, though. I know Greg, so I can kid him like that. Yeah, he got a little bit of extra numbers in there. $1,343 million. Now, compared to $4.4 billion last year. Did I say millions or billions here? 1.3 billion, 4.4 billion. Now, you may be curious what happened there, and there's some things we could go through, and in our class we would probably go through more line by line, but the big difference here is this investment income or expense and other. So you can see almost a $4 billion increase in that investment expense in 2020. There were some accounting changes, mark-to-market accounting changes there that can make some wild fluctuations either up or down. And you can see that's kind of happened over the last 3 years. Typically, non-cash expense. So while this is affecting the revenue, it's not, or excuse me, it's affecting the net income. It's not really affecting the cash. So that's what happened there. So we got our, excuse me, let me go back here. We got our net income, we got our total revenues. Guess what? The next line is net profit margin. So we can go back and look at our income statement, or we can just get those two numbers right here. So 1.3 billion divided by our total revenue of 84.6 billion gives us a net margin of 1.6%. I've gone ahead and filled out the rest of this for us, comparing UPS 2019 to 2020. You can see Equity ratios about 1.1% compared to 5.7 the year before. Part of that is the equity is pretty slim at UPS. Went down considerably from 2019. And we've got return on assets. How do you get return on assets to make a difference? Increase net income or reduce total assets. So revenue growth up that year, net income growth down, and earnings per share down, basically because of that mark-to-market accounting change, accounting rule that had an impact on net income. And you can see compared to 2019 as well. You may want to compare it to some other companies in the same industry. So here we've got UPS compared to FedEx. Now, similar cash flow is a little higher at UPS. This is probably about the midpoint for both of these companies over the last 3 years. So very consistent in their cash flow. Total revenue, this may be looking a little bit at apples and oranges. UPS ended their fiscal year 2020 on December 31st. FedEx ends their year at the end of May 31st this year. So a little bit of apples and oranges there because basically their year that we're comparing here ended about 3 months after COVID hit last year. Comparable in net income, comparable margins there. You can see some different growth numbers related to those numbers as well. But it's always kind of nice to look at the same industry. Now, last month, we focused on Walmart. And certainly this is the beast, the biggest, largest company in the world. You can see some differences there. Certainly Walmart has more cash, they've got more cash flow, but they've also got about 5 or 6 times the total revenue that UPS has. That's not to say by any means that UPS isn't near the company of Walmart. UPS is an excellent company as well. Just different dynamics around some of those numbers. So interesting to see how those numbers wash out there. Walmart had some increase in revenue there, but they were down in net income as well. So pretty simple statement to fill out, navigating the financials, and it's got the equations there to help you with that. Now, we've prepared, we've analyzed. Let's see here. What would be the best place or source to find out industry averages to see if the UPS is over average or not? S&P 500 has some averages. There's a couple of different websites, and Brent or team, if y'all could point Ermin to those websites, I would appreciate that while I finish up. So we've prepared, we've analyzed. Now let's apply. You've probably, this might as well say love mom, right? Rather than your mom. To know and not to do is not to know. Doesn't that sound like a mom statement? Yeah, to know and not to do is not to know. So in other words, if we don't take this information and do something with it, we really haven't done anything. So we've got an apply page here as well. What new insights did you gain as a result of your analysis? And then based on what you learned, what are 3 actions you'll take? So here's my insights. COVID-19 caused some real challenges for many industries, but for some it was a catalyst for growth, and that includes e-commerce, which obviously provides a benefit for transportation and logistics. UPS has new leadership in Carol Tomé. However, she was on the board prior to becoming CEO, and I want to say she was on there for 18 to 20 years. So she was certainly familiar with UPS when she came in as CEO. She was also the CFO at Home Depot, so she is no stranger to large companies in the finance side of business, and certainly I'm sure she's going to use some of that in her role as CEO. Their strategy focuses on customer first, people-led, innovation-driven, through a better, not bigger framework. Other things that seem to have their focus include increasing margin, improving revenue quality, driving revenue through SMBs, those small to medium businesses. Based on what you learned, what are 3 actions that you'll take? Number 1, tune into their earnings calls on a regular basis and complete the quarterly call workbook. I'm a consultant here at Acumen Learning, a facilitator as well, so I do some of these every once in a while anyway, but certainly UPS is an interesting company to look at. Research UPS even further to gain more insights into their success and challenges. And then number 3, compare them to FedEx, DHL, and Amazon to determine some similarities and some differences there. So those are the 3 things as a consultant at Acumen Learning that I would do. So now, if you're thinking about doing this review on a company, there's a couple of different ways you can go. You can analyze your own company. If you're doing that, if you're going to do that, I would recommend meeting with your manager afterwards to align efforts there. Make sure that you are headed in the right direction with what you found and what you think you can do as a result of doing that research. If you've analyzed a customer or a partner, typically it's going to be customer. Meet with your sales manager or the account team to highlight the customer's goals, go-to-market strategy. What can we do as a sales team to be a better partner with them? And if you've analyzed a competitor or benchmark company, meet with your manager to compare your business to their business and see what actions can come out of that as well. So prepare, analyze, apply. Those are the 3 steps to taking a look at an earnings call. Now, anybody remember, I've got the 3 steps: locate the caller transcript, meet with your team. What was number 2? Do you remember that? Put that in the chat box for me if you would. What was number 2? Review your notes. Absolutely. And now we've got notes. That's right. Exactly, Brian. In the preparation stage, we want to review our notes. And the more notes we get, the more notes we might have to be able to review. So let's in the chat box, if you would, tell me, what kind of company do you think you might analyze? Is it going to be the company that you work for? Is it going to be a company that you sell to? And I'll take name of company if you want, or if you just want to put down the generic item here: compete against, partner with, invest in, or just interested in. Maybe it's somebody you're thinking about buying their stock. Yeah, so a lot of it's invest in, who own stock with already. Altria, my company, GameStop. Yeah, boy, that would be a good one to take a look at. We've talked about doing somebody like GameStop, or maybe Zoom next time. Tesla. Yeah, lots of different companies that you might be able to do this with. You've got the tool, or you're about to get the tool, I should say. So at Acumen Learning, we have taught a lot of different companies. We've worked with 30 of the Fortune 50 companies. We actually had a customer of ours, after they took the class, they went out to a third party and had an analysis done on the return on investment that they achieved as a result of going through our class. You can see some of those results that were achieved. This was unbeknownst to us that they were doing this, but ultimately they did end up sharing the information with us. 84% improved the performance of their business or function. 81% increased collaboration. 77% improved upward communications. And you can see the rest of these as well. We've got a lot of people who have gone through our class. If you would, do me a favor, in the chat box, which one of these kind of resonates with you the most? Which one hits home with you? Was it improved communications? Was it improved employee engagement, increased business focus, improved teamwork? What do you think? Thanks, Christopher. Yeah, business focus, AF, yeah, the letters would do it as well. Business focus, love it. Improved upward communications. I love that, improved upward communications, because that certainly says we're more comfortable about talking with those in a higher position than we are. We can actually contribute to a lot of those financial conversations now as well. Thank you all for those. I appreciate that. Man, Weston, I love you, man. All of them. Yeah. So here's where you can get the workbook. All right. acumenlearning.com/webinar. All right. This says $100 off. Don't worry, you're getting the workbook for free. However, in this same website is also, if you want to try out our online modified instructor-led training, then you can get $100 off of that particular format. If you want to learn more about Acumen Learning, there'll be ways to do that in there as well, but you'll be able to download that workbook. If we have done a class for you before, we may have a customized workbook as well for you. The next call is going to be on April the 29th. So we're focusing toward the end of the month. So usually about the last Thursday of the month. And we're looking for suggestions for who we might want to focus on in this next earnings call. I hope this was helpful to you today. Certainly enjoyed being with you once again today. And if you have any questions, me and there's several others from my team as well that'll stay on here and answer any questions that you might have. What about company carrying Bitcoin on the balance sheet? How to approach that analysis? Boy, that's an interesting, that's one I haven't had before, Sam. Uh, you know, I mean, if you've got Bitcoin, I guess it would be a asset that would be on the balance sheet. Um, I'm not sure I know enough about Bitcoin to make a educated answer on that one. If anybody else might have an answer on that, I'd love to see that as well. Good, Conchetta. Thanks. Fun and educative. I love that. Bitcoin would be valued mark to market or what the value is on the day of reporting. Yeah, so thanks, Greg. That's kind of like the item that we saw on UPS. So it changes value all the time. So you have to do a mark to market accounting on that and come up with the different value. So you might see it fluctuate up and down. And we've seen it fluctuate from what, 1,000 to 60,000, I think, over the last 12 months. Yeah, thank you all for joining. I appreciate it. Any questions? Any other questions? Thanks, Alexios. We're going to Uber suggestion for next month. Now, the book that was featured on the initial slide, Seeing the Big Picture, which was written by Kevin Cope, he's our founder and CEO. You can find that book just about anywhere. On Amazon is probably one of the better places to get it. #1 bestseller. Or if you go through our class, you'll have an opportunity to get it as well. So let's do a class. Let's see, does the value of stock go down when dividends are paid to stakeholders? Typically, when stakeholders like dividends, so a lot of times you might actually see the stock go up. It's interesting too when companies are doing share buybacks, typically you see the stock get a little bump when they're buying back shares as well. Good, good. Thank you all. Hey, I actually gave you a couple of minutes back for the day today as well. Thank you, Thomas. Thanks, Brian. Thank you. Thanks, Greg. I don't know what that means, Brooklyn. United Parcel Service, but they changed their name from United Parcel Service to UPS. Thanks, Brooklyn. It's interesting. It just came up as little boxes. Well, I don't know if I'd go that far, Mike, but thank you. Must be the difference in Apple and Microsoft. Thank you, Brent. Thanks, Brad. For those of you still on the call, you're free to go at this point. Thanks for joining us today. Love to have you come back next time as well.